It'll go live before we even know it's live, but setting up, redirecting to our Facebook Live page. And we are currently streaming on live. Hello, everyone out there in Facebook land. You're joining us for the first mortgage leadership outlook series. So basically what we've done is we put together a panel of some mortgage industry experts to talk about what's going on out there. Joining us for our first broadcast here is my good buddy, Justin Demola, CMB. Justin, thank you so much for joining us.
Thank you, Andrew. I didn't realize it was the first one, so I feel honored to be here. So I truly appreciate it. Hopefully I have words of wisdom in this crazy time.
Yeah, well, listen, I mean, yeah, I figured actually if I'm going to screw this up, at least I could screw this up with good friends first time. But so listen, what we are looking, if anyone has any comments, or any questions for Justin, please hit us up. That you should see, right in the comment box over there. We're going to be monitoring. I'm going to pull this up right now so I can see your questions coming in. And give us a second. So Justin, listen, you're having regular conversations with both your members. You're having regular conversations, from what I understand, with the MBA, with Fannie Mae. First off, let's talk about what's going on with your customer, with your members. Tell us what's going on inside their heads, because they're dealing with limitations, but also ridiculous volume, right?
Yeah, so the good thing that's happening right now, as we know, rates were at a super low a couple of weeks ago, and pipelines are fully bulging right now. So we have all of our members are setting record volumes. Lenders One offers a flood certification program for our members, and we resell the flood certifications. And I can tell you that already at this point of the month, we set a record for number of flood certs ran. So volumes are way up. Right now, the biggest concern is of our members, how are we gonna get these loans closed? They're gonna be backlogs on appraisals. They're gonna be backlogs on local municipalities on the purchase market with COs or smoke detector certs. What about recording? So I think, the MBA is a great partner of ours, and they've really been showing their value to this industry in a big way currently. So they're in front of the right people in Washington on a regular basis, if not total constant basis, and they're getting a lot of good things done for us. The Fannie Mae, Freddie Mac through the FHFA this morning released on the origination side. They released their servicing stuff last week, but on the origination side this morning, basically gave lenders guidance on how to handle appraisals and verifications of employment, because those are our members' biggest concerns right now. We have these huge pipelines, rates went up, they had margin calls, now they have to close these loans to recoup the cash on the margin calls. I think that is constant for any player in this market, whether you're on retail, wholesale, correspondent, you're buying loans, as an investor. We're all hedging pipelines and want to make sure that the margin calls, they're going to happen, have the cash to be able to close those loans, or meet that margin call, but then you have to close those loans to recoup that cash. So I think there's a ton of uncertainty right now. While there's an optimism that volume is there and everyone's busy, and I'm going to tell you that everyone has done an amazing job in this industry, switching their workforce from on-site to remote. That is something that it seems like we forgot about it already, other than the conversation you just had with your daughter before we have this Facebook Live. Dealing with the kids and the family life is more difficult and more of an adjustment than the actual technology and the implementation. So we're seeing that our companies are operating at close to 100% efficiency and capacity, and they're really doing great things on the technological side, but then there's the mental aspect of working from home too. So, put yourself back 10 years. If this would have happened to us 10 years ago, or not even that long ago, would we've had the technology to be able to do the things that we're doing and have our members and their employees work from home and be just as productive, if not more productive? So, the overall outlook of the member base is strong. just trying to figure out how to navigate all these times. What's going to happen when loans close, and title companies with gap insurance, all that stuff. I can talk on and on and on for it. And I think the whole industry is in the same spot. We're all figuring this out together, whether we're lenders, brokers, correspondents, wholesalers. This is a learning curve for us, but we're getting there. And the next important thing that I would say is our demand for our e-closing product is through the roof. We have every single one of our members, and again, the collective strength of our cooperative is about 1 in 4 mortgages in the country goes through one of our members. So the amount of transactions and the loan origination volume is tremendous. So I can talk on behalf of the full cooperative that people are looking for these out of the box solutions right now. And we actually I just got the phone before this call, and we actually got one of our members essentially will be at 8 days from contract implementation on e-closings. So we're set up. We have the ability to do it, and we have full hybrid, full e-notes with remote online notarizations, as well as hybrids. So whatever we have to do, we can do. The MBA is pushing through the MAA to get remote online notarization passed in all 50 states, and New York just came out with it. So we're going to start seeing the ability to be closing these loans without ever a personal touch or a human touch, which is great for the industry, and it'll definitely push us forward even once this clears. Sorry, can't hear you.
Okay. I'm muted. Sorry about that. I got a cake being made in the background here, so I apologize for the background noise. But listen, so first off, and as someone just brought up in the chat, I mean, well, I assume everyone who knows Lenders One, there's a lot of people that don't, and I think actually, obviously your members are very, very well aware, and other mortgage bankers actually that are out there, they're aware. But let's talk actually, for those who don't actually understand what Lenders One is and the power of Lenders One, because this is a great time to be part of a cooperative, to know that you're part of a bigger team, because I'm talking to some of the biggest lenders out there, and they've been prepared for this. They have the resources to be able to get through this, and they have a clear definition of where they're going to be able to go from here. For a lot of your members, they're not big giant mortgage lenders, and they don't have big giant resources. So from my perspective, they're able to plug into the collaboratives and the collective or the cooperatives big resources. Is that a good summary of what?
The quick summary of what we do, and again, we've really added some of the top. We have 3 or 4 of the top 5 lenders on the platform currently. So or actually top 10 lenders. So we have a member base that will do anywhere between $150 million annually to $25-30 billion annually. So we have the full scope of membership. I can say that Movement's a member, Guild's a member, Homebridge is a member, Prime is a member. So we have some really, really big guys, as well as smaller IMBs, and we have 220 plus banks, credit unions, IMBs that join they're all owner members of our cooperative, and they're generating, like I said earlier, about 1 in 4 loans, 1 in 4.5, 5 loans in the country. So and we're leveraging the collective strength of this cooperative to offer better execution on loan sales, servicing contracts, vendor contracts, e-close, flood search. But most importantly, and something I spoke about in our annual conference in Miami, is the intangible value. Times like this, and the relationships we have with the agencies and with the MBA, and the resources for all of our members to come together. And when I tell you that our member base, they all are amazing. The leaders of these companies have made a commitment to be engaged in our cooperative, to be fully transparent, share their best practices. I can show you pictures and get you testimonials from our annual summit, where we break up our group. We had 500 people. We break up our group, and all senior level executives and CEOs break up our group by size of origination, annual originations, and the rooms were overflowing, and people were just sharing anything and everything about what they do, how they operate. To give you an idea, a lot of our members previously merged with each other because of the relationships they developed with Lenders One or through Lenders One. They basically are an open book, and they realize that we can learn more about this industry and best practices when we all work together. And it's somebody once, actually, one of the testimonials we got from Miami was, I think they called it the crazy test. You go to those networking sessions and validate if we're doing what we're doing is correct or not correct. And it's a great check and balance. But the membership base is what drives us, and that allows us to develop relationships with so many different types of partners to this industry to really, times like this, come together. And I started out by saying it earlier, and yeah, I have a very close relationship with the NBA, but the things that they're doing 24 hours a day, 7 days a week, to make sure that this industry keeps going, and that Americans have the ability to obtain credit and obtain home ownership, keep their homes, refinance to a lower rate to save money, especially now. So the strength of the collaborative is pretty unique. And I think you mentioned in one of the advertisements about this that I came from the broker side, I came from the IMB side. I've been running origination shops for 26 years, so I know what it's like to be on that side of the table. But being over here on this side, and the collective knowledge of this group is just unbelievable.
Yeah. So, and I do want to talk a little bit. I want to dig a little bit more into the conversations that you're having, like with Fannie Mae, and like what do you see in terms of the progressive things that they're doing in terms of allowing appraisal waivers, related to, obviously we know VOEs is just an ugly thing that we're going to be having to deal with. I mean, we're going to be able to verify employment today, but people are filing for unemployment by the tens of thousands an hour potentially.
So
how do the GSEs view this?
Well, the GSEs are regulated by FHFA. So, we were waiting on an origination letter that came out this morning. Well, we were expecting it last week. And, we have, like I said, we have great relationships with them. And so we kind of hear what's going on, but unfortunately nothing is official until it gets approved by the FHFA. They announced their letter this morning, basically showing that they want to continue the flow of credit to Americans. And again, the appraisal options, whether it's a waiver, whether it's an exterior inspection or a desk review, that's a real big change. Especially on a primary residence, there's no LTV restrictions if it meets guidelines. Now we're still waiting to hear what the MI companies are going to come up with, but we believe that they're going to also follow suit. That's something that the agencies act first, and then the trickle down effect on the higher LTV loans. So you have that, and as well as the verifications. I mean, they made a pretty bold move by saying they can get a most recent pay stub. They can see that a direct deposit, hit a borrower's account. So they're really trying to make loans right now, and I think that's the most important thing that everyone is learning from this. There's other ways to document employment, but they're also giving the lenders the warning that they have to use prudence. So if they know for any reason there was a shutdown or layoffs or people were not able to work, it's going to be a little more difficult. But they're really giving the lenders and the borrowers the options and to get loans closed in a timely manner and keep rate locks and keep the system moving. So I think that's the most important thing.
Yeah. So I'm just this is just asked in the chat. Now I wanted to get that, and so let's talk about something positive. What are you most optimistic about? Like let's talk about something that could put a smile on the faces of the mortgage originators that are out there watching this, the mortgage bankers, because there's a lot of ugly stuff here. We're talking about actually an unbelievable amount of volume that's going to be happening. People are worried about are they going to be able to close this volume because they are going to be able to have to pay for those margin calls. But let's talk about positive. Let's talk about something as optimistic of all the things that you're seeing.
So, if I'm going to look at industry wide, I'm going to look at my little world. My little world's not so little, but it's the attitude of this industry is pretty amazing. I mean, we're all resilient people. We've been through things like this before, obviously not to this scale, but you know what?
Yeah.
Thank God, volume is there. Technology is there. Seems like the government is there for us and trying to make sure that we can continue to do what we do. We're in a much better position in the restaurant industry right now, or some of these other industries. But the positive is what everyone has a great attitude. Everyone wants to get through it. Yeah, there's some fear and some uncertainty, but we all know that we'll get through it. And as Barry Habib says, and I will quote him. We're in the greatest industry in the world, and we are. Earnings potential is unlimited. You can help people get into their homes. You're really changing people's lives. And I think that we'll get through this as a country, and we'll get through this as an industry. Just got to all remain positive, stick together, and certain things we're not going to be able to fix tomorrow, but stay positive. The vibe is really strong about where we're going and how we're going to get there. And I think this is going to change the industry a lot, even on the technological side. If we can get these remote online notarizations, our world is going to be totally different moving forward. What's going to happen with Fannie, Freddie, and GSE reform? Probably off the table for a while right now. So, let's see what happens. I mean, and this is a perfect example of why we need our government to help our homeowners to a degree. And they announce they're buying bonds every day with no limit. So that's going to keep this flow of credit going, and I think that's important.
Yeah, and I think actually the important thing, as I was just having a conversation, is hearing that the government is listening to private sector, and not making decisions absent of organizations like Lenders One, like MBA, hopefully interacting with the small independent mortgage companies too.
Yeah, I mean, and that's where the small independent mortgage companies have us as their mouthpiece. And we're aggregating questions from our member base to the MBA. If they're members of the MBA themselves, that's great as well. But again, this is not supposed to be a commercial for the MBA and the CMLA and the CHLA. They're all great organizations in times like this. And it's important to understand that just like the National Association of Realtors, you got a lot of real good stuff going on, and they're all pushing hard to keep this industry going, keep food on our employees' tables, and moving forward with closing loans and purchasing homes and all that stuff.
So let me ask you this, and someone just brought this up in the chat. So listen, you guys are at the center of it all, and I'm assuming you kind of lead by example when it comes to the technology. How are you guys as an organization, as Lenders One, using tools to communicate better? Like, what are some of the cool things that you guys are doing as an organization to have a replacement for the face-to-face that you guys were having?
So it's interesting. We're primarily remote. As an organization, we're spread out throughout the country. We're on planes a lot of the time, and we've obviously been on travel restriction. And I spoke to my sales group earlier this week, or actually the end of last week, and I said to them, okay, guys, we need to find better ways to communicate and put some smiles on our members' faces, because the relationships that we have with our members is pretty deep, and it's not just business, it's personal, and they've known each other for a long period of time. And I said, we got to figure out, let's be a little creative. So this morning in my text, I got like four video reach outs to our member base from one of my salespeople with her child, in her lap, and basically like, good morning, so and so, how are you? Just checking to make sure you're okay. And we're putting a smile on people's faces, and they're responding in a positive way. And we do have some other cool technology stuff coming up that oops, did I lose you?
No, I'm here.
Okay. All right, that's weird. Do have some other cool technology stuff that we're going to be rolling out. Obviously with the uncertainty of travel, we're looking for cool ways to get our group together and make it more interactive, more so than just a webinar or one side speaking to the other. So be on the lookout for some of that stuff, because that will be really cool coming down the road.
Fantastic. So how about liquidity? Let's talk about actually warehouse line lenders. This is something. Obviously it's a big concern that we have as we've seen major shifts, as we have like you mentioned, we have a huge opportunity to do a ton of business, but with some potentially limited warehouse lending capacity.
So I can tell you that the partners on our platform are still accepting new applications. They want to grow. We've heard some rumblings of some people slowing down fundings. It could be end of quarter. It could be a myriad of different reasons. We're not 100% sure. But thankfully, our member base has not been negatively affected by any of the change. Any one of our members has a couple different funding options, so they can switch gears pretty easily and make sure that they're covered and protected. And it seems like the warehouse stuff is good. I mean, obviously, where the market is dried up right now is the non-QM stuff. So we are hearing that warehouse lenders aren't putting any non-QM stuff on their lines because there's no secondary market for it. And I think that's, if we're hearing any of the rumblings, that's probably where it's coming from right now. But that's that market went pretty quickly, but I'm sure it'll come back. Depends how long this thing lasts, and we're expecting it to come back.
Yeah, and I think warehouse lenders are basically, I mean, listen, their bellies are full with a paper loan. So I gotta go where it's gonna, the opportunity is gonna be, and where there's gonna be potentially less risk. Do you guys have any non-QM lender members?
We do. We have some members and investors, and obviously right now everything is coming to a slowdown. But they're remaining optimistic as well. And on the investor side, they're all going to fund and close and purchase the loans that are locked in that they've already committed to. So we have good relationships with all of them, and I'm hearing that a bunch of places. But we also read in the news that there was some non-QM lenders that just basically stopped. So it's a difficult time for liquidity on a lot of that paper, and we get through it. And thankfully there's enough of the agency and government business out there that's really still 95%, 98% of the work right now in today's low rate environment. So I think it's while it's impactful and it's a little scary, it brings us back to yesteryear, but I think we're in a good spot still.
Fantastic. So what do you think actually is going to happen in terms of our ability to quickly ramp up digital closings?
Yeah, it's obviously there's a need, right? So if there's a need, mother of all invention is necessity. So, so there's definitely a need. Like I said to you earlier, that a lot of people are reaching out to us. Majority of our member base is looking for a solution quickly. I think the government is operating and acting relatively quickly. Governor Cuomo did made an announcement over the weekend that he enacted Ron. Just roughly half the states have it now, a little bit more than half. If the federal government can come out and say, what, this is affecting a lot of different worlds, not just the real estate mortgage world, and finance world. So let's figure out how we can really just streamline this process. I mean, the technology's there, right? We all have the technology. It's pretty easy to identify people, whether it's on a computer or in person. So as long as you're using the correct technology, the safe technology, the approved technologies, it's really a non-issue. I think there's going to be a learning curve for some of these title companies to really get used to doing it this way. But it definitely makes the closings more efficient. It makes the mortgage companies more efficient, especially on the back end, right? Now, the post-closing time is pretty much negated because all the documents are signed in the right spot, signed the correct way, returned into the LOS systems right where they need to be. It's kind of a set it and forget it for the most part. So, I think it's going to depend on the government for the full e-closings on the remote online notarization. And they have some servicers that still aren't buying them, but I think they'll start buying them super quickly, the e-notes. So like I said, success story, 8 days, from start to finish, 8 days with one of our members. And we offer a full consultative e-closing solution, which is great.
Yeah, fantastic. So I want to ask you, as far as vendors, what is your conversation? Because I know you guys you've got great relationships with vendors. Your vendors kind of rely on the business that comes from your members. Are you seeing slowdowns from vendors? Are you seeing obstacles? I mean, obviously the full appraisal's got to be difficult to be able to happen right now. So talk a little bit about your interactions with vendors.
So, we don't have, we're owned by AltaSource, and AltaSource has Springhouse violations. So, we don't really get involved in that so much. So we don't have any external vendors on the title and or appraisal front. There's some RESPA issues there, obviously, as you can imagine. So, we have our own companies. Right now, that volume is going strong. We'll start seeing, people canceling appraisals now, I'm sure, right? Now that, especially now that they know that they don't need to come in their house, because Fannie and Freddie said, hey, you don't need to come in the house to do an inspection. So, but in terms of our other vendors, we have, Ari Karn and Afik Kerman, they're on the platform. They're talking about COVID, that they have a solution and some suggestions for our member base. On the technology side, obviously it's the e-closing stuff. More of the POS stuff is out there, and we're driving that. But realistically, it's the same as it was 3 weeks ago, 4 weeks ago, 3 months ago. It's everyone's looking for the best way to manufacture a loan at the cheapest cost. So all of our technology partners, whether it's AI, machine learning, that stuff is the need, and we're trying to really choose the best in class providers to help our members do that. And the more we can do that, the less people we need. And I don't mean that in a bad way. I mean, we can repurpose them to do different things, but we don't need to all be stuck in an office in front of a computer looking at stuff all day long. And that's where we are. I think industry wide, the biggest need currently, or a week and a half ago, 2 weeks ago, was outsourcing. Everyone was looking for underwriters. Everyone's over capacity, no matter who it is, where it is, the biggest lenders, the smallest lenders. We got one of a top 10 lender that reached out to us last week and said, I have 2,500 loans a month. At least I want to give you. Can you handle them? So
Wow.
that's crazy. So like I said, the volume is there. This situation in the health situation is not good, but we'll get through it.
Yeah. Fantastic. So listen, we're coming up on the 30-minute mark. I appreciate you really taking the time to join us. I know you've been, nonstop from calls with the NBA, calls with GSEs, calls with your members, calming them down, hearing what's going on with them, finding solutions for them. Anything actually you want to say in closing before we wrap this up here?
No, like I said, I think we should all just remain positive, and we'll get through this as an industry. That's what we're all here for. I'm gonna tell you, I had a quick text exchange earlier with Anthony Casa. See how the broker world's doing. And I think right now it's important that we're all together, get through this together. There's some pretty big margin calls out there right now, some numbers that are staggering, and we get the loans closed to offset them. I think everyone will be in a good spot. So there's gonna be some bumps in the road, but I think everyone in the industry is working together to get through this, and as a team, we will get through this. So, I appreciate your time, and just want to tell everyone, just be positive. We'll close loans.
So listen, I just got my buddy just texted me on this now, and I'm curious about this. So knowing actually what we're going through right now, knowing actually what's happening, do you feel actually that the broker channel is well positioned, in the future? You brought up actually Anthony Casa and brokers. You set this off. Okay. Of course, how can we not? So talk to us about
Can you tell me who your friend was that asked that question? Let me say this. I owned a broker company for 18 years. I believe that they offer tremendous value for the industry as a whole. I also believe that at some point brokers are going to want to progress their business to start building net worth and not become transactional. And to do that, you have to start becoming a lender and going into the servicing world, which is not a good thing the past 3-6 months, but ultimately long-term business plan. My concern for brokers is a couple things, and this is where it gets difficult, and I got to be careful of what I say, because I was there. It was my life. I think it's a great opportunity to get into the business, to learn the business, to originate loans, and move on to the next loan. But the biggest concern that we see right now, or is the fact that if anything happens with your primary funding source, it could be devastating upon your business. Same way it could happen with if a warehouse lender pulls out or something happens. But most of the sophisticated mortgage bankers are hedging their loans. So if rates go up or rates go down, they should have a no gain, no loss hedging strategy where they're going to be okay. So they're at the end of the day, they're going to sell a loan, whether it's locked at call it 3% today, and rates go up, rates go down, they're okay. If there's an issue with a funding source on the broker side and rates go up and they can't close that loan, there's no one that's going to come up and say to them, you know what, Mr. Broker, I'm going to offer you a 3% interest rate today, and then you're upsetting borrowers. But that's the business model, and it's not necessarily a bad thing. And you have to be really, just like as a lender, you have to be very picky and careful with the vendors and investors and the business partners that you're doing business with, because unfortunately you're not as much control and a little bit more at the mercy of those partners in that channel. And again, it's been there, done that, and it's not a bad thing. I think it's just you need to know the risks of that. And if a large player has a funding issue or an issue, I mean, we can go back to when TBW went down, in 2007 or 8. I mean, yeah. It really affected a lot of people, and rates weren't as volatile back then. So I think it was easy to take that loan and switch it. As we have volatility in this market, and rates are, if it's an upward trending market, it has a bigger impact than if it was a stable or downward trending market. So yeah, I mean, the broker world is a good way to get into the business. It's a good business model with risks, as the lender model is a great business model with risks. Depends what you want and where you want to go with it. We have some members and actually broker loans at times too. So it's definitely a good model, but I would be a little bit more concerned who I'm doing business with today, because it could have a pretty big impact if all your eggs are in one basket. So I guess I would say spread the work around a little bit.
Yeah, that makes sense. Sign up with more lenders. Get signed up. Get ready to be able to work with a mix of lenders. I think Austin Emick, the QLMS executive vice president, is like one of his famous things that he goes around talking about is optionality is the mortgage broker's great superpower. And the ability to have actually the options like that.
In a stable market, it's a great superpower, right? But yeah. It has to be a stable market and a secure market. And I think the financial markets are just too uncertain right now I'd be extra prudent in where don't take the easiest path to close the loan. And I hate to say that, but I would spread them out for the most part. Obviously, if someone's priced out of the market, you don't want to do that, but I would spread them out a little bit more.
So, I mean, long-term viability for the wholesale channel overall. I mean,
that's an unfair question.
I know it is. Listen, I know actually that you are actually a former mortgage broker. That your members are mostly retail mortgage bankers that focus on retail. You do have some wholesale lenders that are in there, but the majority of them are like the top retail lenders of the country. So I would just love to get your perspective, because there's this actually, so to me, actually, I look at it two ways. One way actually is a mortgage lender, there's less operational risks because when they're increasing their business on the wholesale side, because they're not opening up new offices, they're not probably getting AAA, real estate, they're not getting new copiers. They're just saying, hey, find brokers to deal with. And it's a variable cost model, whereas that retail business, they're paying for that. So does this help or hurt long term the broker and the wholesale model, I should say?
I think time will tell. And what I mean by that is, we want this industry to survive. We want the American consumer home buyer to get the best deal possible. But I think, if you have, it all depends on what's going to happen on the liquidity side, and people are going to be able to pull through this. I think that's the most important thing. I think, Anthony's done a good job, trying to professionalize and really get the brokers working well with the wholesalers and vice versa. And, but ultimately time will tell. There's no right answer to that or wrong answer to that. I hope everyone survives. A lot of our members offer TPO work as well. So, I think it's a good model in a lot of ways. It's a quick way to bring business through the door, and it's not as profitable. And if other than, I think, UWM, I think they're the only one who's strictly wholesale. I mean, when you start looking at models where you're offering retail, correspondent, and wholesale, times like this, and you have to preserve your liquidity, are you going to go to the most profitable channel? But
Yeah.
other than that, I don't know at all. I think, like I said, I think it's a great industry that we're in. There's a lot of outlets and options and varieties of way to operate, and hopefully we all get through it and keep working hard and closing loans, and the liquidity will be there.
So I'm gonna one more question, and we
Okay.
know like 15 minutes ago we said we're gonna stop this, but one more question has came up in the chat room. Do you think that the industry is better poised to withstand this uncertainty than in previous economic decline? So I mean, let's look at at the last times we've gone through this. Obviously, 2008. How do you think we are as an industry dealing with this compared to previous times?
So I think we've learned a lot from the past. You learned a lot with some of the hurricanes and the disaster areas there. Overall as an industry, like I said previously, the technology where we are today to where we are then is amazing. We have the ability to do so much more, whether it's work from home, close loans electronically, whatever it is, we have that ability. I think the difference here is the previous downward cycle, we'll call it, in 2007, 8, 9, really was a financial event, right? So there was a financial event. Right now, it's not a financial event; it's a health event, and I think this is something we've never seen before. Like I said, the infrastructure of our industry is strong. I believe, if the government is going to step in, it's for different reasons this time. I made a comment earlier to a colleague that, it's people that are asking for bailouts or money and whether Americans are going to get money or not. It's not for something that they did, right? The government basically said, hey, listen, you can't operate your business, or you can't do this, or you can't do that. And they've changed the way our American industry is currently operating, therefore affecting wage earners and incomes. So by looking at that, you would hope that while they're taking away the ability to earn and put food on the table, that they're going to give back to try to help the country a little bit more, as opposed to saying, well, why am I bailing you out, Mr. Bank? You made billions of dollars in the past, right? So I think it's a different philosophy, and I think what we're seeing is we're going to get the support, and I believe it'll continue. So I do think we're in a great spot to be able to get through this and keep going. Home purchases may slow down for a little bit, but let's be honest. I don't think rates are going to go up anytime soon. It's an election year. Our economy now is hurting. There's no reason for interest rates to increase anytime soon. So you look at that and go, okay, you know what? This may be a pause of volume or a slowdown of volume for a few months. But as soon as people get their jobs back and they start earning money again and rates are still low, they're going to start buying houses again. There may be better deals out there. So I believe that ultimately we're going to come out of this much stronger than we went into it. And that's hard to say because the volumes were crazy, but I think the ramp up cycle and the recovery time should be quicker than it was in the past, because our industry isn't what caused the problem this time. And I think the black eye that we had back then is what stalled a lot of it. So I think we'll get through it.
Wonderful, fantastic. All right, Justin, thank you so much. And listen, if you're watching this, live or in the next 24 hours, tomorrow we're going to be doing another Facebook Live with Alex from Sales Boomerang. It's going to be. He has quickly transformed his organization from, you have to be there. We want to see you face to face every day, to a remote working organization. They're having a lot of fun with it. Like I got to say, they're doing some really, really cool things that make it very, very, very exciting. We've actually started to implement some of those things, just stealing his ideas, because the guy's just got great ideas. So, Justin, thank you so much for joining us and sharing your knowledge with us. We really, really appreciate it. If someone wants to get a hold of you, what's the best way to get a hold of you?
Justin.demola@lendersone.com.
Fantastic. All right. I appreciate it. And again, I'm Andrew Berman from NMP. Thank you so much for watching.